The cracks are showing in the US economy. The market has sold off after President Trump declined to rule out a recession. And the Dow was off nearly 900 points, 1,100 at the worst of the day. The S&P is off, well, you can see the numbers, but it was the tech that was hit the hardest. NASDAQ off 4%. And the Magnificent Seven, well, you've got Tesla off the best part of 15%. It's the sharpest drop since 2020. Nvidia off 5%. Sam's with me, Sam Stovall. Gosh, we need you tonight, Sam. Chief Investment Strategist at CFRA Research. I mean, it all makes sense when you think of the uncertainty that the market is facing both on trade, on foreign policy. But what will it take to stabilize these prices?
Well, Richard, I think that we are in what I would call a manufactured correction, meaning that it's because of the policy and the statements made by the president and the current administration. It has increased the uncertainty that business leaders have toward what kind of investments they should make in their companies, what kind of growth prospects they might see for their marketplaces. At the same time, because of that, the Atlanta Fed has reduced its forecast for first quarter GDP growth to actually a decline of 2.4%. So the R word, recession, has been bantered about.
Okay. So let's not worry whether there's a technical recession or not, because that's just that's a numbers game. I'm more interested in this manufactured uncertainty that's now there. Eventually it becomes real and the fabric starts to fray, because as an earlier guest was pointing out, we're also talking about an upset, a deep rupture of relations with allies, and that could take much longer to repair.
Absolutely. I think that the longer that we go with this trade discord, the deeper the market could end up declining. And as you said, could take much longer to repair. Many people are now beginning to talk about the Smoot-Hawley tariff of 1930 that exacerbated the Great Depression. And we're not at that point yet by any means, but still it does indicate that, we are in a globe that works with each other and needs to work with each other. And when those trade walls, trade barriers go up, that really causes businesses to slow down.
And you know as well as I do, they go up very fast, they come down very slowly. But here's the question, or bearing in mind what the president might be thinking. He might be thinking, look, just as easily as I've turned on the tap of uncertainty, I can turn it off and everything will recover. Do you buy into that if he suddenly sort of kissed and played nice, it would all be fine again and the market would be back to the races?
I think that if that were to happen sooner rather than later, yes, that the market is already expecting even deeper declines for the S&P, for the NASDAQ, et cetera. So should the president decide to call victory now, then I think the market would explode higher. Typically, stocks tend to pop after a drop, but I think the longer he maintains, in a sense, the pedal on the brake, then that will make it much harder for this market to turn around.
I'm grateful for you, sir. We'll talk many more times, I fear, or I'm looking forward to, but I fear the situations under which, you know what I mean. Looking forward to it. So
I look forward to it either way.